Hello everyone, we are going to discuss about the previous year question of Corporate Accounting 2 from University of Madras. In April 2014, the subject code is BPW4A, part C. This question is from Holding Company Account Chapter. Let me read the question. The following balance sheets are given as on 30/6/1987. In the liabilities side, share capital 12,000 shares at rupees 10 each, 1,20,000 to M company, and 3,000 shares at rupees 10 each, 30,000 to S company. Creditors 15,000 to M company, 5,000 to S company. Reserve 25,000 to M company, 6,000 to S company. Profit and loss account 12,000 to M company, 9,000 to S company. So the total liabilities are 1,72,000 to M company, 50,000 to S company. In the asset side, building 72,000 to M company, 25,000 to S company. Machinery 30,000 to M company, 10,000 to S company. Stock 18,000 to M company, 3,000 to S company. Debtors 22,000 to M company, 7,000 to S company. Bank 5,000 to M company, 5,000 to S company as well. And shares in S company 2,000 shares. The amount is rupees 25,000 to M company, no value to S company. So the total assets are 1,72,000 to M company, 50,000 to S company. At the date of acquisition by M company, the S company had undistributed profit amounting to rupees 5,000, and none of which has been distributed since the date of acquisition. Prepare consolidated balance sheet. Based on this information, we have to prepare the consolidated balance sheet of M company. First, we should know these notes information. The first one is M company is a holding company or purchasing company. S company is a subsidiary company or selling company. And revenue profit is after acquisition profit or post acquisition profit in bracket after acquisition date, and the capital profit is before acquisition profit or pre acquisition profit in bracket before acquisition date. Then we are going to calculate the holding minority ratio. M company acquired 2,000 shares from S company. So the S company has the total number of share capital equal to 3,000. So holding portion of share capital equal to 2,000. Minority portion of share capital equal to total share capital minus holding portion of share capital. So equal to 3,000 minus 2,000, we get 1,000 as minority portion of share capital. So the holding minority ratio equal to 2,000 is to 1,000 or 2:1 or 2/3, 1/3. Then we are going to calculate the capital profit. S company in bracket subsidiary pre-acquisition profit or before acquisition profit. We have to mention undistributed profit. The amount is 5,000, which is from the adjustment from the question. So that amount is considered as capital profit. Then holding portion of capital profit equal to 5,000 multiply with 2/3, we get 3,333.33. Then minority portion of capital profit equal to 5,000 multiply with 1/3, we get 1,666.67. Then we are going to calculate the revenue profit. S company subsidiary 30/6/1987 total The profit and loss account, total profit and loss account is 9,000 and the total reserve is 6,000. And then we have to add this amount, we get 15,000. Then less capital profit, which we have already found, the amount is rupees 5,000. That amount will be less with the above amount. So 15,000 minus 5,000, we get 10,000 as a revenue profit. Then holding portion of revenue profit equal to 10,000 multiplied with 2 by 3, we get 6,666.67. And minority portion of revenue profit equal to 10,000 multiplied with 1 by 3, we get 3,333.33. Then we are going to calculate the minority interest. S company in bracket subsidiary, minority portion of share capital equal to total amount of share capital of S company multiplied with 1 by 3. We get 10,000. It means 30,000 multiplied with 1 by 3. Then minority portion of share capital equal to 1,666.67, which we have already calculated. Then minority portion of revenue profit amount is 3,333.33. Then the total minority interest is 15,000. Then we are going to calculate the capital reserve or goodwill. Amount paid by M company to S company. In the asset side of M company, there is information of shares in S company, 2,000 shares in asset side of M company. The amount is rupees 25,000. Less face value of shares have purchased by M company from S company. So in bracket shares in S company, 2,000 shares in asset side of M company. So the 2,000 multiply with 10. 10 is the price per shares of S company, and the 2,000 is the number of shares of S company which the M company has purchased. So the amount, the face value of shares amount is 20,000. Then holding portion of capital profit is 3,333.33, which we have already calculated. Then we have to add these inner columns amount. We get 23,333.33, and that amount will be less with the above amount. So 25,000 minus 23,333.33, we get 1,666.67. So that is the positive value. So we have to consider as that amount is the goodwill. Then we are going to prepare the notes to accounts for preparing the consolidated balance sheet. Note number 1 is share capital. Under the share capital, we have to mention M company holding. The share capital amount is 1,20,000. Then note number 2 is reserve and surplus. Under the reserve and surplus, we have to mention M company holding. General reserve 25,000 plus profit and loss account 12,000. These are the amounts are from the holding company of M company limited, and the total is 37,000. Then plus holding portion of revenue profit, the amount is rupees 6,666.67. So the total reserve and surplus are 43,666.67. Then note number 3 is a trade payable. M company holding. The creditors amount is rupees 15,000 plus S company subsidiary. The creditor amount is 5,000. So the total trade payable amount are 20,000. Then note number 4 is tangible assets. Under the tangible assets, we have to mention M company holding. Buildings, the amount is rupees 72,000 plus S company subsidiary buildings 25,000. Then we have to add this inner column amount. So 72,000 plus 25,000, we get the total of 97,000. Then M company holding machinery 30,000 plus S company subsidiary machinery 10,000. So the total amount of machinery is 40,000, which we have to mention in the outer column. Then the outer column total is 1,37,000, that is total tangible assets total. Then note number 5 is the intangible assets. So under the intangible assets we have to mention goodwill. The amount is rupees 1,666.67. That amount we have already calculated. Then note number 6 is stock. Under the stock we have to mention M company holding. The stock value is 18,000 plus S company subsidiary. The stock value is 3,000. So the total stocks are 21,000. Then note number 7 is a trade receivable. M company holding debtors 22,000 plus S company subsidiary debtors 7,000. So the total trade receivables are 29,000. Then note number 8 is a cash and bank balance. So under the cash and bank balance we have to mention M company holding. The bank balance is 5,000 plus S company subsidiary. The bank balance is rupees 5,000. So the total cash and bank balances are 10,000. Then we are going to prepare the consolidated balance sheet of M company and its subsidiary of S company as on 30/6/1987. So first we have to mention the equity and liabilities. Under the equity and liabilities we have to mention shareholders funds. Under the shareholders funds we have to mention share capital, that is note number 1 heading, and number 1 will be mentioned in the note number column. The note number 1 total is 1,20,000, which we have to mention in the rupees column. And the reserve and surplus is note number 2 heading, and number 2 will be mentioned in the note number. So note number 2 total is 43,666.67. And then minority interest. For the minority interest, no note number. So the amount minority interest amount is 15,000. And current liabilities. Under the current liabilities we have to mention trade payable. The note number 3 total is 20,000, which we have to mention in the rupees column. And we have to add this amount, that is total A. The total amounts are 1,98,666.67. It means 1,20,000 plus 43,666.67 plus 15,000 plus 20,000. Then we have to prepare the assets information. So we have to mention the Roman letter 2. Then under the assets we have to mention non-current assets. Under the non-current assets we have to mention tangible assets, that is note number 4 heading, and number 4 will be mentioned in the note number column. And note number 4 total is 1,37,000. Then intangible assets, that is note number 5th heading, and number 5 will be mentioned in the note number column. Then current assets. Under the current assets we have to mention the stock, that is note number 6th heading, and the note number 6th total is 21,000, which we have to mention in the rupees column. And the trade receivable, that is note number 7th heading, and note number 7 total is 29,000. Then cash and bank balances, that is note number 8th heading. Number 8 will be mentioned in the note number column, and note number 8 total is 10,000. So the total assets are 1,98,666.67. That is 1,37,000 plus 1,666.67 plus 21,000 plus 29,000 plus 10,000. That's all.